Jai Hind friends. Today we are going to understand something very important. How banks actually make money. Most people think banks just keep your money safe. But the truth is, a bank is not a locker. It is a business. And like any business, its goal is simple to make profit. So let's understand how this works in a very simple way. When you deposit money in a bank, you feel that your money is just sitting there safely in your account. But that's not what happens. The bank uses your money. This system is called fractional reserve banking. Banks are required to keep only a small percentage of deposits as reserve. The rest of the money is used to give loans. So, when you deposit 1 lakh, the bank might keep a small percent and lend the rest to someone else. That means your money is actually working in the economy. Now, here is how banks make money. The bank gives loan at a higher interest rate and pays you a lower interest rate on your savings. For example, the bank may give you a loan at 10% but pay you only 3 to 4% on your savings account. That difference is called the interest spread, and this is one of the biggest ways bank earn profit. Now let's talk about loans. When people take home loans, car loans, or personal loans, they pay EMIs every month. A big part of that EMI is interest. Over time, people end up paying much more than the original loan amount, and that extra money becomes income for the bank. So, every EMI you pay is helping the bank grow. But that's not all. Banks also earn from fees and charges. For example, ATM charges, late payment fees, processing fees on loans, credit card charges. These small amounts may not seem big individually, but when millions of people pay them, it becomes a huge income source for banks. Now, let's talk about digital payments. When you use cards or certain payment systems, banks may earn a small fee from merchants. Even if UPI is free for users, the ecosystem still creates value through data and partnerships. So, even your daily transactions are part of the system. Another important way banks make money is through investments. Banks invest money in government bonds and other safe instruments. These investments generate steady returns. So, banks are not just lending money, they are also investing money. Now, here is the important understanding. Banks are not working against you. They are part of the financial system. They provide loans, support businesses, and help the economy grow. But at the same time, they are running a business, and that means they will always try to earn from your money. So, what should you do? First, understand that your money is always in motion. Second, avoid unnecessary loans and high interest payments. Third, don't keep all your money idle in savings account. And most importantly, start investing so your money works for you, not just for the bank. Because in the end, the system is not unfair, but it rewards people who understand it, and it costs money to those who ignore it. If you understand how banks make money, you will start making smarter financial decisions. And that is the first step towards building real wealth.